When you look at our world from space, what you see is a huge blue sphere. We live on a planet where 71% of the surface is covered with water. That's why throughout history we believed that water would always be there, that it fell from the sky for free, and that it was an endless resource. But this is a massive illusion. Those vast oceans you see are undrinkable. Only 2.5% of the world's water is fresh water, and we can only access 1% of that. The rest is locked up in glaciers. And now, an unprecedented battle is beginning for that 1%. This war is being waged not with armies, but with algorithms, futures contracts, and trillions of dollars in funds. Wall Street has even begun pricing the world's most fundamental resource as the new oil. But why now? How can you turn something that falls from the sky into a financial commodity and sell it? Today, we delve into the darkest and least discussed corner of the modern economy. We examine artificial intelligence's hidden thirst, the virtual water trade, and why the next massive global inflation shock will stem from a water crisis that central banks cannot solve. In economics classes, we are taught that agriculture is the largest consumer of water. This is true. However, in the last 5 years, a new player has entered the game that has turned all macroeconomic models upside down: the technology industry. Currently, every 10 to 50 questions you ask ChatGPT consumes approximately half a liter of clean water. Does that sound like a small amount? Microsoft's data center water consumption alone increased by 34% in just 1 year due to the AI revolution. Those massive servers operate at an incredible heat, requiring billions of liters of pure water to cool them. They cannot use seawater or wastewater because the minerals in them would destroy the systems. But the real big case study is happening in Taiwan. You've probably heard of TSMC, the world's most advanced chip manufacturer. Chips that power everything from your smartphone to your car. To produce a chip, silicon wafers must be washed countless times. For this process, ultra-pure water is used, which is thousands of times cleaner than normal drinking water. In 2021, Taiwan experienced its worst drought in 56 years. Reservoirs dried up. The Taiwanese government, in order to prevent the global chip supply chain from collapsing and the world economy from grinding to a halt, cut off water to agricultural fields and began transporting water to TSMC factories by construction trucks. Can you imagine? A trillion-dollar technology industry was dependent on water being transported to factories by truck. This incident revealed a terrifying truth to decision makers. A water supply shock is far more frightening than an oil supply shock. Billions of dollars worth of goods change hands every day in global trade. But if you think that ships only carry electronics, coffee, or avocados, you're missing the bigger picture. Economists call this virtual water. Let's look at Chile's Petorca region. It meets a large part of Europe's avocado needs. However, it takes about 2,000 liters of water to produce 1 kilogram of avocados. Chile isn't just selling a green fruit to Europe. It's exporting its own limited groundwater reserves, its rivers, its future. This situation creates a massive global arbitrage between water-rich countries and water-poor countries. Why do you think the Saudis are buying huge alfalfa fields in Arizona? Instead of consuming water in their own deserts, they are producing animal feed using America's groundwater and shipping it back to their countries. Transporting water directly by tanker is costly, but converting it into a product and shipping it is one of global capitalism's most efficient tricks. When a resource becomes scarce, demand is inelastic, meaning it is price insensitive and essential. And industries are critically dependent on that resource. What happens? It becomes financialized. A historic turning point, unnoticed by global markets, occurred in late 2020. At the Chicago Mercantile Exchange, CME Group, water futures contracts began trading on the NASDAQ Veles California Water Index. You could now buy and sell water just like gold, oil, or coffee. When you look at it, this is a very rational macroeconomic step. Imagine you have a huge almond orchard in California. If there is a severe drought next year, you will have to buy water on the black market at astronomical prices and go bankrupt. To manage this risk, you enter the exchange and purchase a $100,000 contract that locks in next year's water at today's price. If a drought occurs and water prices skyrocket, your exchange contract will gain value, offsetting your physical losses. Flawless risk management, right? But nothing in the financial world remains that innocent. When you open up an asset to derivative markets, you invite trillion-dollar institutional investors and hedge funds into that market. Today, giant funds are not just buying futures contracts. They are also quietly accumulating physical water rights in regions with high drought risk. In the US and Australia, vast tracts of land are being purchased solely for the rights to use the groundwater beneath them. Ownership of an asset whose circulating quantity is determined solely by nature is becoming consolidated in the hands of a small number of institutions focused on maximizing profits. And this brings us to the real danger ahead: a new wave of inflation. Central banks can raise interest rates to curb demand and control inflation. But a water supply shock is a completely different beast. Even if you raise interest rates to 50%, the wheat in the field or the chip factory won't need any less water. When water prices rise due to speculative or physical reasons, food prices skyrocket. Energy production, hydroelectric and nuclear power plant cooling systems, grinds to a halt, and technology supply chains collapse. This means a permanent inflation spiral that will embed itself in the global economy and cannot be resolved by any monetary policy tool. The great economic wars and embargoes of the 20th century were built around oil. You can find alternatives to oil. You can switch to nuclear, solar, or wind power. But there is no alternative to water. There is no other substance in the universe that can replace it. The most critical economic question of the next decade is this: can water, the fundamental source of life, be left to the ruthless rules of the free market and the profits of stock market speculators? Or is it an inalienable human right that must be protected? While decision makers search for an answer to this question, someone in the background has already begun buying up the faucet valves.